Welcome, ladies and gentlemen, to the first episode, Political Economies of Forbes' new digital TV format. Started in the crisis, but it's going to remain in the future. My name is Niklas Sintermeyer. I'm a journalist of the German-speaking issue of Forbes, and I will be your host for the upcoming weeks. By this new format, Political Economies, we would like to discuss, raise question, debate on the financial and political implications of the current coronavirus crisis. How is businesses, politicians, how are they gonna deal with this current crisis? How is this financial crisis that some analysts are already classifying as being more severe than the one in 2008? How are we gonna deal with this impending financial crisis? And what are gonna be good financial stimulus and rescue packages in the United States and also in Europe? I want to get to the bottom of those things by doing interviews with economists, professors, deans of universities, experts and analysts of think tanks, and also researchers and scientists. I'm very pleased and I'm very happy to have my first guest here. It's Branko Milanovic, an economist. He's one of the top leading experts on a global level about income inequality, globalization, capitalism, and wealth distribution. Branko Milanovic is visiting professor at the Graduate Center of the City University of New York and also of the LSE. So I would like to welcome you, Branko Milanovic, now at our new format. Thank you that you have time, and then we can talk about the implications of this current coronavirus crisis on income inequality, capitalism, and globalization.
Thank you very much, Niklas. It is a pleasure to be there, or actually at least virtually to be there.
Exactly, yeah, exactly. I would like to start with the first question because, of course, you're now based like in Washington, D.C., and I read some statistics. There are about 2,000 infections, about 80 deaths so far, and also like you're not really obliged, you're not really allowed, so to say, to go out, just for certain reasons, so to say, but the stay-at-home order has just been extended until the mid of May, so to say. How do you deal personally, like also like in professional context, with this coronavirus crisis?
Well, first I have to say that of course it's not easy. I don't think it's easy for any of us. It's a big adjustment. It's a really sort of a, how should I say, to a large extent it's a pretend life, because it's not a normal life that any of us lives. We obviously first are social creatures. We want to meet people. We have normal lives, whether it is work, school, meeting friends. All of that obviously now it is gone. So it is not a good life. On the other hand, it's true now. It has been now 40 days since more or less I've been at home. And one does adjust to some extent because even the structure of your daily life changes. And after a while, you get adjusted to that. But I'm, of course, looking forward, like everybody else, to an end to this. Although, I mean, we are all, of course, afraid that one should not, open up the economy, I believe, before we are quite sure that we can handle the health effects of the opening up of the economy.
Sure. How does your work life, so to say, look like in these days? Because you're a university professor, are you completely working remotely, or how does your daily professional life look like?
Yeah, you see, it's a good question because it is yet another adjustment. I've never actually given my classes remotely, using different ways of course reaching the students. So I had to adjust like many others. Actually, I had to do it for the first time. I did it, I think, about four weeks ago. It's working okay. I'm not unhappy with it. And I think we might actually have to adjust and to start doing that in a more regular fashion in the future. I still do believe that actually personal contact and real class, when you have students in front of you and they have you in front of themselves, I still believe it is better. But, not having that option, obviously what we have now is it's okay. I mean, it's doable.
Yeah. I would like to talk about maybe more in general terms before we really get to the coronavirus crisis, about income inequality. I would like to start with the very dramatic figure, I would say, like about global income distribution. So like on the global level, because it's a figure from 2016 that 5% of the world's population receive 50% of income, and like the poorest 10%, 0.7, and like on top mostly like Americans and Europeans. I mean, can this system, like, can it be sustainable like in future?
Okay, well, it's actually nice to start with that. You know, obviously, global inequality is huge. It's actually greater than inequality within each individual country, which, of course, is even on an intuitive level, I think, should be obvious because you have differences between countries like Switzerland or Austria or the Netherlands or Norway, which are very rich, and then on the other hand, you have countries like Congo or Madagascar that are very poor. So the gaps are, of course, huge. However, one has to actually also realize that if you use a sort of a standard measures like the Gini coefficient or the tail index, which take into account the entire distribution, so they don't focus only at the top and the bottom, you do find that since about 1990 or 1995, approximately, global inequality has gone down. And it has gone down thanks to high growth rates of China, India, Vietnam, Thailand, Indonesia. So these are all, of course, very large countries, populous countries, and they had growth rates per capita which were in excess of the growth rates of the rich world. So in that sense, they have really contributed to the reduction of global inequality. Now, just to finish with that, I think in the future, what will be, it's a big question, whether Africa, where the large increase in population is supposed to happen over the next 50 years, would be able to converge on rich countries' incomes. In other words, just to be very clear, when I say converge, obviously we don't expect Africa to become equally rich because it's impossible to do that in 40 years, but to have growth rates which should be higher than the growth rates of the rich countries.
Mm-hmm. I mean, is it foreseeable, like in Africa, I also saw a blog post of yours, that it could catch up like in the next, I don't know, 10, 20 years, or it's such a huge gap that it's pretty much, it's not foreseeable, so to say?
No. I'm not mean. I mean, I don't mean that actually it would catch up in terms of income level with let's suppose Europe. That cannot be done even in 50 years under the most optimistic conditions. But when we measure, of course, inequality, if the poorer people, and in this particular case, just to simplify, if the poorer countries have a rate of growth on per capita basis, which is higher than the rate of growth of the rich countries, then you do have a convergence and a reduction of inequality. Now, that means also, leaving coronavirus for the minute aside, because that obviously it's a big game changer, but we don't know how it would affect. But let's suppose that we are now talking before the coronavirus crisis. If the Western countries, you can project in the next 20 years, would grow at, let's suppose, 2% per capita. That means that Africa, in order to converge, would have to grow by at least, let's suppose, 5% per capita in order to have some convergence. Plus, you add 2 points for the population growth rate. That means that basically Africa would then have to generate growth rates of 6 to 7 or maybe 8% per year. And as you can see, it's actually not easy at all to do that over a period of 2 decades or 3 decades or so.
Mm-hmm. I would like to talk about like income inequality, like within countries, like on a national basis, because you're also saying like a perfect equality in these terms, it's not very achievable and also not very desirable, so to say, because there has to be like certain incentives to work hard, really to gain wealth, so to say, and like also to establish and found companies. I mean, I know we cannot generalize these things, but like, is there like a certain threshold when on a national level income inequality becomes pretty bad? It's really like a problem.
Yes, of course we cannot. It's very difficult. We don't have a sort of a magic number saying, let's suppose the Gini coefficient of X is really desirable. But let me try to actually explain it a little bit. Let me stay with the Gini coefficient, which is the most popular measure, and actually that's the coefficient that takes into account everybody's income and then calculates one number, which sort of is the average of the distances between people's incomes. So that number ranges from 0, which would be, of course, theoretical situation where everybody has the same income, which obviously is impossible and then never existed, nor can it actually exist even if you look from the point of view of a life cycle. Obviously, a person who is now studying in school will have a 0 income, and somebody who is working would have a positive income. So there will be inequality simply because of that. And then the other extreme is a number 100, where the entire income is appropriated by one person. So obviously, that's obviously, I mean, a theoretical maximum, which doesn't exist. How should I say, let's suppose what successful West European countries with relatively manageable inequality have is a Gini coefficient, which is slightly above 30. So let's do it heuristically and use another analogy with a Celsius scale, which I actually find and my students find very appealing. So if you have like nice temperature, you can say, well, that's 25 degrees, 30 degrees is a little bit warm, but it's still very pleasant. But when you go to the case of the United States, which has a Gini coefficient which is above 40, you can say it's a little bit too much. You know, and when you go to Latin American countries with the Gini is above 50, it's really way too hot. So I would then say really in terms of heuristically, and obviously it cannot apply to every country because there are countries that are small, homogeneous in terms of education level and, you know, cultural level and so on. But I would say the Ginis between 30 and 35 are something that we find, I suppose, reasonable level of inequality. But the Ginis over 40 or 50 is something that we find that it's inequality which is very high.
And also, like, speaking like in practical terms, of course, like income inequality can also cause like a deterioration, so to say, of social cohesion. Like that, some people feeling like they're feeling left behind. They don't have the like equal opportunities. But I also think very interesting and very important, so to say, they cannot keep up like with growth levels like within a country. So I think these are also very important factors, right?
Yes, I think actually when one argues against high income inequality, I think one can argue on several grounds. One ground, which I think has gained more empirical support recently, is that very high inequality is inimical. It's not good for the overall growth. Now, that was in the past, if you go even back to Ricardo, the approach was the opposite. It was actually believed, and there is still grounds to believe that in some cases, that if you have income inequality, you have large savings. Large savings are necessary for growth. However, there are certain points where actually very high income inequality means deterioration of institutions, means that the society gets really divided into two groups, the haves and the have-nots, and means that actually you might have lack of investments in things like public infrastructure. I mean, we see that, for example, in the US in terms of health or other infrastructure, so that actually it can decelerate or it can reduce the rate of growth. Secondly, you can also argue that very high inequality makes achievement of equality of opportunity more difficult, because if you have high inequality, obviously the children of those people who have been relatively poor will not have the same opportunity. So basically you're losing lots of incentive that in the sense that people who are relatively poor cannot achieve certain positions in their life. And the third ground is political, is that high income inequality leads to the political process being dominated by the rich. So these are the three grounds that you can actually question high inequality.
Interesting. I think also like in the last point, you mentioned like several times like the rich, because they can better influence like the political debate, like also like within campaigns.
Yes, I think it's actually very clear, particularly in the case of the United States, where you don't have limits on campaign contributions and where actually individuals or company are treated equally. So in that case, you certainly have a greater influence of the rich on the political process. Now, you can say, why is it bad? I think the reason why it is bad is that everybody, by definition practically, would try to make the political process and the decisions be made in his or her favor. So the rich are not different from anybody else. You know, if we also had the power to make decisions which suit us, we would actually do it. But of course, in that sense, the rich are actually then able to make regulations or tax policy which is in their interest, to actually have policies which are not uh, which let monopolies rise, and other things. So I think politically the effects of high inequality are something that is really received more and more attention.
Let's start a little bit to talk about like the coronavirus crisis. I found a very interesting like essay from the Austrian historian Walter Scheidel, and he wrote that reliable in regard of the leveling of prosperity relations are just four things. It's like war, revolutions, collapsing states, you know, and deadly pandemics. Now we have like a deadly pandemic going on like on a global stage. Do you think like when it comes to income inequality, we're now entering like a new stage, so to say, in regard to this topic, you know?
Yes, I think first I would like to say that Walter Schaidel's book, The Great Leveler, is really a very important book. I know Walter, and actually I was very, sort of impressed with the book. To be quite honest, I never thought that we would be actually facing a pandemic now. And of course, Walter's work was basically when he singled out epidemics in the past as great levelers, it was based on what we know, especially with respect to the Black Death in the 14th century in Europe. Then, of course, we had also two other large epidemics, one Antonine epidemic in the 2nd century AD, and the other one under Justinian in, I think, around 560. And so, particularly with respect to Black Death, it is generally considered by economic historians to have reduced income inequality because it has actually killed lots of people. You know, if you obviously kill lots of people, then labor becomes more scarce and the price of labor goes up. Well, this is what I called also in my book, Global Inequality. I called the malign forces of income equalization. So it is obviously some income equalization that is absolutely undesirable. It's not desirable that you should kill 30% of the population in order to reduce inequality. So these are the malign forces. Of course, I think that we have had benign forces, increased education, greater power of trade unions, higher taxation, all of these forces which have reduced inequality. Now, just to try to answer the question, how would be the effects of coronavirus? Well, we don't, of course, know what will be the effects of the coronavirus. And within countries, it seems to me now that we can actually expect that the coronavirus might produce an increase in inequality in the short term, because lots of people who are in the lower part of the income distribution will be affected by loss of jobs and loss of income. Now, how it would play out after 3 or 4 or 5 years, I think it's still quite unknown. But I don't think that we are sure as of now that the coronavirus would be a great leveler. I hope it.
Is it
yes,
just
please.
true, like in more Western countries, like industrial countries, or also like in emerging countries, so to say? Or on what terms are we talking that you're saying, okay, it's likely to increase like the income inequality?
I'm actually having in mind, especially the US, and I'm having in mind the similarities between the effects of the coronavirus on different income levels with the 2008-2009 crisis. Now, some people may say, well, this is not a valid comparison because this crisis is different, and I totally agree. This crisis has many features which the financial crisis did not have. However, we still have to go by analogy because it's very difficult to actually, without data, without any information, to tell what would be in the future. But if you look at the first effects of the 2008-2009 crisis, they reduced incomes at the very top and at the very bottom. Now, the very top, like now, lost income because of the decline in the stock market, which reduced their overall assets and reduced income from those assets. The bottom lost income because they lost jobs. Now, if I look at the crisis today, unless I'm mistaken, because obviously we don't know how it would play out, but if I look at it today, it seems to me that the percentage of the population who will be affected by job loss or income loss now would be much higher. That means that actually maybe all the way to the median income, we would have significant declines in income. And that in turn might imply an increase in inequality. So this is the logic that I kind of follow.
And so to say, like the median income or like the middle class, because it's like in Western countries like US, France, Germany, it's like kind of stagnating, it's kind of stuck, so to say. To put it simple, do you think it's going to be like in the same range?
You know what I find there are many things that we find really very dangerous in this crisis. Well, I think first the number of casualties. Secondly, open-ended nature of the crisis. In other words, we absolutely have no idea when the crisis will end and how it would end. And this is something which we really never faced. And in that sense, I think it looks very much like a war, because when you start a war, you also have no idea if that war is going to go on for 3 months, 6 months, or 6 years. And so there are many worrisome features, but one which I find also very worrisome is that it comes on the heels, obviously, of the financial crisis about 10 years ago, and on the sort of following a fairly long period where the middle class incomes in the rich countries have not grown significantly. They have not declined, they have grown at very modest rates. So then now if you have a decline over the next 2 years, I think it is something which would really be politically very difficult to sustain and which might have political consequences.
Mm-hmm. Because you mentioned before, like the global financial crisis in 2008 and 2009, you wrote like in a blog post about the world per capita GDP, that it declined like 4 times, and like the last time was in 2009 because of the global financial crisis. You also refer to the IMF, and the IMF says like basically that like world per capita GDP is gonna at least like reduce like in those terms in comparison to the global financial crisis. But you also wrote in your blog post, you said, okay, the United States and Europe, it's more likely to be hit more severe, so to say, by the financial crisis, but not so much Asia and maybe China. And so like this process of this narrowing gap on a global level, so to say, it's gonna be even closer, so to say. What could be these consequences, what I just described?
Yes, I think actually what you described is basically what the IMF believes will happen. And we have, of course, to say that we don't know what will be the effect of the crisis, of the corona crisis, on India or Latin America or Africa, because so far, of course, these parts of the world have not been very much affected, but they are beginning to be affected, with India, of course, going on a shutdown. So the process of convergence might not actually continue if there are really significant income losses in Asia, in Africa. So I think this is what we currently expect. Now, when you look at China versus the rich world or the advanced economies, I think there is no doubt today that the rich economies, particularly in this year and quite likely the next year, would actually have negative rate of growth, or at least significantly lower rate of growth than China. But again, if we achieve convergence in this way, I would call it, as I did mention about inequality before, really an unhealthy convergence. In other words, I think would be a healthy convergence if you have poorer countries growing at a higher growth rate than the rich countries, but rich countries are still growing. But if we have rich countries really going down by negative growth rate of 3 to 4%, whereas China, as we now expect, would have a positive growth rates of 2 to 3, this is, of course, a convergence, but it's not a convergence that we can actually find desirable. So I think that, yes, it will probably continue with big question marks as to what will happen to India, because India is really now, because of the population size, is really a crucial country when we talk about global inequality. And last point, we did have historical, if you look at the IMF data, we had only 4 or 5 years since 1952 where there was a decline in real income of the world. And I think that this year probably would be the worst year in terms of that decline.
Let's talk about like a little bit about globalization itself. If we imagine like globalization with the cross-border flows of capital, movement of labor, of workers, people, like in general, especially like in the European Union, because that's of course the core of the European Union. There are more and more like experts and voices, so to say, that gonna question, of course, like the globalization, like the fundament, the base of globalization. Is it good to have open borders all over the world? And what I want to ask you, you also said like in recent years that one cause for income inequality was also like globalization. When we look at free trade or free trade agreements, because just the ones gonna be wealthier that are already prosperous, so to say, if we look at free trade between countries. What's your thinking about globalization? How it's gonna develop like in the next couple of months and years, maybe,
Okay, my opinion on this is the follows. If you had a view of the crisis, which would be sort of a binary, that one day we say, well, the crisis is over, we turn off the switch, and everything goes back to the way it was before, then I would say, well, it's not really going to affect globalization very much because we would just go back to status quo ante immediately. But I don't think that actually, and I think most people don't think that this is how we are going to see the end of this crisis. I think we would go through a period maybe of a year and a half, 2 years of stop and go with hard lockdowns, then soft lockdowns, then hard lockdowns. So all of these things will continue in some ways. And all of that, I think, is going to put a further strain on globalization. If you look simply today, when we have hard lockdown, we don't even have a possibility, which is our first time in probably ever, to move from country to country. So that by itself is mobility of labor has actually declined by probably 90%. Mobility of goods has not declined as much, but and probably mobility of capital either. But I believe that actually, if the recovery takes place of these stop and go measures, we would definitely have a sort of a weakening of international links, which by definition is the weakening of globalization. And just to end on that, I think there will also be a reassessment of certain types of globalization, which depended very strongly on very complex global value chains. Because that's what we have seen now, and I think we'll see more and more of that in the next months, is that if one small part of that global value chains gets broken, then you have really a collapse of production. And that means that you're very efficient if everything works very well, but you are very, very fragile. You're not resilient. So I think that there will be sort of reassessment of that, and that in turn would actually probably reduce the extent of globalization compared to what we had before.
As a maybe provocative question, is rethinking of globalization and like the intertwined world, so to say, is it maybe like also like a good thing and maybe like a chance, to do for the better things for the better, like in the future?
I don't know. I'm generally in favor of globalization, and I think that this kind of retrenchment might be good for some people actually, because there will be some people who will benefit from some retrenchment. I'm not sure it will be good overall for the whole economy of the world as such. And I have to say that if that's a big if we are able, for example, to have a vaccine or a solution within a year or 2 years, I really would actually not see dramatic changes in globalization in the period after that. So I do believe that actually the less this crisis lasts, the less would be the effect on globalization. The longer it is, I think the more significant will be the effect. And let me put it another way. The longer it lasts, the more you need to adjust to the new forms, including us, for example, doing all of this virtually. So the more then we become comfortable in that new way of doing things, so the more the less likely are we to go back to what was before. So I think in that sense, the duration of the crisis is a key element, I believe.
Yeah. As a last question, I would like to ask you about like the form of capitalism. It's like in recent years, like several experts again raised the question: is it like a sustainable system? Is it like the best system that we nowadays have? And I found it very interesting to overcome like income inequality. Like in particular, you proposed more of a like a egalitarian capitalism, so to say. So I think with 3 factors and elements. Inheritance taxes for more equal opportunities, and like really fostering education for everyone, really good public universities. Like in the 3rd term, it's about making for the middle class accessible like the financial assets. Do you think is it really, how you say it, is it gonna turn out like this way, or is it like on a political base? Is it doable?
I actually think that broadly speaking, it is doable. And let me say why I think it is doable. Because after World War II, Western Europe and North America, I think, had the vision of the social welfare state. And of course, I will not go into the history, which is quite well known, and with the role of the trade unions, socialist parties, the 2 world wars, and all of that. Also, the power of communist ideas, the role of the Soviet Union as a potential threat, and so on. So we all know that. But I think now we need to sort of start reflecting about a different vision. And the different vision would be the vision where you would not have to correct these disparities in market income through large redistributory schemes, taxation and transfers. Because at some point it becomes kind of an unsustainable, simply because people really don't like or refuse to be taxed more and more and more in order to reduce income inequality and to actually improve the incomes of the people who are at the lower level. But if you have more egalitarian capitalism, which means if you have people with more financial assets, so that actually financial assets are not concentrated in the top 5% or 10% of the population, then your redistributory scheme doesn't need to be so huge. I mean, to give you an idea, because I think it's useful to think in the extreme case, if you had pretty much equal distribution of financial assets, and if you had more or less equal distribution of human capital, meaning education levels, you don't need to have a huge redistributory scheme because incomes would not differ by that much. So this is not a plea to say that we should all have same education, same assets. It is just saying that if we reduce the diversity of asset holding, we would actually be able to reach inequality levels that are sustainable without really having an extortionary or confiscatory tax policy. So that's why I think that actually that vision has lots of appeal, and it's actually something that politically should be doable. It's not easy because it's going to take some time, but if you have that vision, you can move towards that.
Branko Milanović, thank you very, very much for your time and for your willingness to answer our questions. I think it was very interesting. We covered a wide range of topics, and I hope we can gonna see each other like in the future again. We can talk with each other again, and I wish you all the best with your work in Washington, D.C.
Thank you very much, Nicholas. It was really a pleasure for me, and I hope we can actually meet person to person, so not only virtually.
I hope so. I hope so. Soon we should do it. Okay.
Thank you very much.
All the best.
It was a pleasure.
Bye.
Thank you.